Hello all, welcome to week 3 video in the series of part-time traders and investors hub. In this series, we are discussing about the strategies which are helpful for part-time traders and as well as part-time investors who has very less market knowledge and who has less time to spend with stock markets. And in today's video, we are going to discuss even more simpler way and also a famous market instrument when you are having less knowledge or no knowledge about stock markets, and here you no need to look at the charts as well. So nifty ETFs, so we'll be seeing what are these nifty ETFs, what is NiftyBees, their advantages and disadvantages, their past results, and the return on investment. And we'll also see a calculator to calculate your future returns, and at the end I'll be showing you a demo where to buy, and also I'll be giving some tips when to buy. So let's understand what are Nifty ETFs. ETFs. ETFs are exchange traded funds. So here we are using Nifty ETFs. So the Nifty is an index of 50 top companies which are listed in NSE. So we have two exchanges in India, most popular exchanges. One is NSE, National Stock Exchange. And the next one is BSE, Bombay Stock Exchange. So how this Nifty ETF works? In the Nifty 50, the combination of top 50 companies index is going up, then the Nifty ETF value also goes up. And the combination of the 50 top stocks in India is going down, the Nifty ETF value also goes down. Who manages these ETFs? Asset management companies, AMCs, manage the fund what we invest into Nifty ETFs. So one of the asset management company which is listed in the stock exchange is Nippon India. So the Nifty ETF managed by Nippon India is called NiftyBees. Who should consider investing into Nifty ETFs? People who has less knowledge or no knowledge on the stock market and looking for long-term investment options. So you can consider taking this Nifty ETFs or NiftyBees for long term. And we don't need to do the portfolio management, like you don't need to shuffle the stocks, because it will be done automatically as part of the fund management by the Nifty ETF fund manager. In this case, if you are taking Nifty Bees, then Nippon India will take care of this. And your portfolio is already diversified because it is a combination of 50 stocks and they are from different sectors. So in this way, your risk is also very less. So let's see how the Nifty 50 looks like and what kind of stocks are in it and what is the weightage for each stock. So I'm taking you to NSE website. It's an official website of National Stock Exchange. I have opened the sector percentages or sector weightages under Nifty 50. So if you see the financial services, the banks and the non-banking financial services are contributing 35.95%. So it is almost 36% weightage is given for financial services. And next it is IT, the information technology sector, and then followed by oil and gas. We also have FMCG, construction, healthcare, automobiles, consumer durables, power, metals, and mining, so on. So let's see what is under financial services. So if you click this, you can see the stocks under this financial services. So they are the top weightage stock is HDFC Bank. After the merger of HDFC and HDFC Bank, it has become the top weightage in Nifty 50 as well. And you can see there are top banks like ICICI Bank, SBI, Kotak, and some non-banking financial services like Bajaj Finserv and Bajaj Financial Services also. So similarly, if you look into the IT split up, you can see in Infosys, TCS, HCL Technologies, and so on. And we can also see the oil and gas sector where we have um, Reliance Industries is the top weightage, and this is the second largest weightage stock in the Nifty 50. So because of this heavy diversification between the sectors, so the risk involved in this ETF investments is very less. Because if one sector is having any bad news and it is underperforming, the other sectors will still do good or they will not fall much. So in this way, your complete ETF will never go to zero. So unlike stock investment, here the ETFs or the Nifty ETF and Nifty Bees will never become zero. So if any one of the stock out of these 50 stocks starts performing low, and if it is constantly performing um, underperforming or giving less returns, so it will be automatically removed from this top 50 stocks, and it will be going to the 51st position, and the 51st position stock will come up to the Nifty 50 bucket. In this way, the individual stock related risk is also handled here, and this has become the risk free investment option. So the amount you are investing into Nifty ETFs or Nifty Bees will be splitted according to their weightages. Let's say you are investing 100 rupees into Nifty Bees, and out of 100 rupees, 13.3 rupees goes to HDFC Bank, 7.7 rupees goes to ICICI Bank. It is not that 100 rupees every stock will get 2 rupees equal share. It's not in that way. It will be splitted according to the weightage that they carry in the index. So by now you would have got a fair idea on what are Nifty ETFs or Nifty Bs. And coming to the advantages or benefits of this Nifty ETFs is, as you have already seen, they are diversified in a very good way, and automatically as well. You no need to do it manually. It is diversification because they are the fund that you are investing is anyway getting splitted into different sectors and different stocks with different weightages as well. And the other benefit what we have is the low cost. So these funds are managed automatically most of the time via some software. So there is no manual effort, or much manual effort is not needed to execute these funds. So that's why they are of the expense ratios of these funds are very less compared to the regular mutual funds what we are seeing in so the liquidity of these Nifty ETFs is also very high. So you can buy whenever you want when the market is open, and you can sell whenever you want. So there will be always buyers and sellers in this Nifty ETF funds, especially in the Nifty piece. That's why I have taken this example for this video. So we will also see how where to buy and in which platforms it is available and all. Let's quickly see what are the drawbacks of investing into Nifty ETF or Nifty Bees. So market volatility will impact the performance of Nifty ETFs. So market fluctuates violently when there is a pandemic or any surprise war news and all. So that is one of the drawback, and there is a small tracking error which normally it varies from plus or minus 0.15 percentage. So what is this tracking error is the Nifty ETF should follow the performance of Nifty 50 index. Sometimes there is a little bit of tolerance here of plus or minus 0.15 percentage, and limited customizations because you cannot select the stocks which needs to be in the Nifty ETF because these are already predefined by the exchange or NSE, which stocks and which what are the weightages they should carry inside the Nifty 50 index. Let's see the returns of Nifty Bees. So Nifty Bees was first inserted in 2002, and the current value is 218. Until now, it has given somewhere around 2000% return. But this is not so important for us. We have to see the CAGR return, yearly returns. So till now, on average, we are getting 15.5% CAGR returns out of Nifty piece. And if you even see 5 years returns, it is 14.8, and 3 years return, it is even more good. It is near to 20%. So even we are beating the category averages as well. So let's quickly see the returns by inputting our data, and we'll see how much return that Nifty ETF would have generated for our investment. So here I'm taking the gross SPI SIP calculator, the systematic investment plans calculator. You can also use any other website or the calculator in this case. So here I am putting 3000 and expected rate of return per annum. This is coming from our fund returns by Nifty Bees. It's around 15.5 till now from 2002 onwards. If you take the returns, it is almost 15.5 every year. We are getting this as a CAGR. So let's add that as well, 15.5, and the tenure, the time period I'm taking as 25 years. So that means every month, if you invest 3000 rupees for next 25 years, you will be reaching more than 1 crore of your total value of investment if you are adding 3000 rupees into Nifty Bees every month. So the final part of the video, when to buy and where to buy. So here I have opened Zerodha, the kite application. Here either you can type Nifty Bees, and you can see there are two instruments which are coming here. First one is from NSE and second one is from BSE, but both are handled by Nippon India. But we have to select the one from NSE because the ones from NSE are more liquid than others. So once you add, you can just press on the buy button and give the select the long term and then give the quantity how much ever you want. Let's say some 100, some random numbers I'm taking, and then hit the buy button. So not only in Zerodha, if you have any other brokers in their platforms, they will be a search option. Like if you have Upstocks or Fires or Five Paisa or whatever it is. So just go to their search option and type Nifty Bees, and you will see this instrument in their platforms as well. So the procedure is same, that you have to select a long-term option and then give the quantity and buy. So coming to when to buy. So there are some studies suggesting we will get a little bit of more returns when we invest our SIP amounts every last Thursday of the month. Let's say October, the last Thursday is 26th. Similarly, then the next month, the last Thursday is 30th, and in December, the last Thursday is 28th. So it's better to put our SIP amount on every last Thursday of the month. Okay, we have covered the content plan for today, and this is purely for educational purpose. And don't consider this as an investment advice. And there are some more strategies to increase the return potential of this Nifty ETFs or Nifty Bees. Please do let me know in the comment section if you need more such videos. I will take it up in the next weeks. If you feel this content is helpful for your family members or your friends, please do share with them. And thanks for watching till the end. See you next week.